change a little bit. And I already see some questions about position sizing and dollar amount, the amount of shares. Yes, we're going to have the dollar amount, and we're going to have so you'll see the position size and the dollar amount. So you'll get that granularity. We're changing things a little bit. We won't have an open stop loss on it, but you will see everything we do very soon afterwards. And we're, as you can see on the live stream, we're also putting it there, and then you'll see it in the portfolio. Um, this is where we're going to be managing this very much like we would manage our own money. I mean, it is our own money. It is real money that Mark and Brandon opened the new account on March 11th, 2024. It's been sitting there in cash until just recently, till the first couple trades. But the start date, as far as we're concerned, will be March 11th. That'll be this inception date. It earned a little bit of interest, so I had a little bit of a profit there from the interest. And now, of course, we took a couple small losses on those first trades, and it's just above, I'm sorry, just below the break-even point right now. Let me see what else. I'll answer your questions. I know there's actually some good questions here. Let me just roll back here, and then any questions that you guys put in here as far as trades and stuff outside the select portfolio, I'm going to just bypass those and let Brandon and Mark uh, address that. Okay, so question one here is, now that Mintermini Select Portfolio reported two minimal losses, do you adjust the base dollar amount to determine the size of the positions, or keep working with the original portfolio capital, 100,000? Also, could you comment how to do it when the portfolio reports gains? Okay, so that's the first question. That's a great question. You guys want to answer that? I mean, we're going to certainly adjust, and we're not going to take a 25% position based on $100,000 if now it's at 90,000, right, Mark?
Yeah, exactly. You just recalculate based on whatever the net asset value is.
Yeah, and again, it might not be perfect every time. We're not going to have exactly 25% or 12% if it's a half position, 12.5%. But you'll certainly see how we're approaching it and how we're approaching progressive exposure. And this will be more, I think this will more be able to mimic a smaller portfolio. We specifically made it a small portfolio, relatively small, with 100,000, to represent something that is more likely to be an individual's portfolio. And even if you had $1 million, you would manage it the same way that we would be trading this 100,000. The one thing that you have to keep in mind, though, is that, again, we're really completely detached from the market. When we're starting off with money that there's no profit in, we may go a while, especially if we start off with losses. We may go a while before we're aggressive or get any real position sizing, because we're not going to go in there and look and get at a loss too big right away. So even if the market's rip roaring taking off, if that's not translating into profitable trades that we're making, and you may have open positions on the portfolio, as far as the open positions on the platform are concerned, there may be 30 of them, and they're working great. But this is also going to give you, I think, a portal into seeing how we would deviate, or I should say, how we would let the traction in our own trading dictate, as opposed to even the market conditions. I don't know if Mark and Brandon, if you guys want to comment on that, but certainly this is no different than you've managed your own money for the last 14 years, right?
Sure. And just a little example this morning, Mark was saying, hey, why don't we jump right to full, off the hop? And I said, well, why don't we wait a little bit?
Yep.
Give it another 20 cents. Similar, exactly what the platform is doing, just because the last two trades were losers. So we're
Yeah.
we're being a little more conservative.
Yeah, the 12.5% position today, Mark was like, okay, why don't we go a little bit lighter? I said, fine, if that's what you guys want to do. I was gonna go right to a full 25% position in the IBIT, because I got the stop so tight. I was actually, suggesting maybe we use the day's low. If it takes out the day's high, we go in, and then we just use the day's low. And right now, until we get some traction, let's just keep the stops minimal, minimal, minimal. And if we don't get it perfectly right, then we just run and we look to re-enter. Real quick, a comment about the IBIT. In a daily, it's setting up really nice, but when you come off of a pullback buy, whether you're in a low cheat, a handle, sometimes what will happen is, if you look at the weekly, zoom out a little bit, isn't yet showing you a really great chart where you've got that right side built. And you can see here, it's looking good, but if you look at the weekly, it looks like it still has some work to do over here on the right side. And that is totally normal when you're buying off of a low cheat, a cheat, or you're buying a pullback buy. The daily could look pretty darn good, but the weekly still had, and that's why what'll happen is a lot of times now you'll come up here up that right side, and then you will need to go through another iteration. Now, it doesn't necessarily mean it's going to happen, but you maybe need to go through another iteration and set up and complete that daily to really have that right side built out and get that symmetry and even more tightenings. And then you go to the weekly, and the weekly starts to improve, and you get that inside week, and then it all comes together. Now, it doesn't always work that way, and that's why we'll buy off the daily if it's coming up that right side, coming out of that low cheat, even though the weekly may look a little bit compressed. Just a little extra, added color for you there. Okay, so this other question is based on a stock that I'm going to leave to these guys. We got PSTG questions, WDC questions. Okay, so hi Mark, if you purchase IBIT, how do you manage the risk given that Bitcoin is tradable 24/7 while IBIT is not? I thought that's an interesting question, Mark. Brandon, what do you think of that?
Well, yeah, you have to position size, potentially accordingly. And look, you do have some weekend risk because it's sort of in that commodity type space. But look, thus far, I would say, when the risk is this tight, that's why we're waiting for an even tighter entry point. We're sort of, factoring that in. At least that's the way I think about it.
Yeah, let me just scroll down a little bit here. I'm looking for actually a lot of questions about individual stocks and trading in general, and not a whole lot about the select. So that's good. I think that means that things maybe are self-explanatory, and you guys understand. Not too much confusion here. Let me
I've got
see.
one. I've got one here, Mark. Sorry, they got the
Okay. Yep.
landscaper outside my office.
Okay, go right ahead. Yep.
It says for Minervini Select Trade Portfolio, is it possible to make closed trades available and to
Yeah.
put in the number of shares and or amount of each trade?
We're doing that. We are putting in the number of shares, or certainly I think right now they're going to put in the dollar amount. So it'll show what dollar amount, and I believe we're also going to have what percentage that is of the overall portfolio. So you'll see the position size, and then in not so in the not so distant future here, probably in the next couple weeks or so, I think we're going to have the same type of closed trade register where you can go and look back at the closed trades. And then also, I believe we're going to have where you can then take those, put them in Dharma, and you can analyze that too. So we can look at the risk reward and all that. So yeah, but we tend to shoot quickly before, like we try to release things real fast when we get an idea or new technology, and then we sort of massage it later on. So we're still working on that page and deciding. Okay, another thing that I wanted to bring out that I forgot to say up front is that we also haven't yet decided how we're going to do the evaluation. We're going to do a recap and evaluate the trades and talk about them. I think we're going to do a video and then just make that available. I'm not sure if we do it intra week, at the end of the week, just trying to decide what the timing of that is, the frequency. And then what we'll do is just mark Brandon and myself will be on that and just converse about it, and we'll just discuss it and say what we're thinking, and that'll give you, a not only to see the trade unfold and then see the portfolio, also then a recap where we say exactly why we did what we did and what we did. And I think this will be, with everything else, this is about as full of a training tool as that we can get, and to really make it real life. So we're working on that stuff. Let's see. Anything else? Is there anything else, Mark, about?
Yeah, well, there's a few more. One, Steve is asking about the tutorial video on the select trade. Mark mentioned, speaking about this Mark Ritchie, the average loss was 2.44% on the two trades. Since this was 50% exposure, why would the result not be a 1.22% loss? Well, that's just because, like we said, we earned some interest on the cash in the first 2 months versus the loss is a little bit smaller. The Constantine was saying, when can we expect the first video analysis? As he thinks that would be a bag of golden nuggets. Well, that's what Mark was saying, but I don't know, Mark, why you want to add some color there?
I think at times it will be a bag of golden nuggets. I think at other times it's going to be very obvious. You're going to see what we did. Look, things are not going to deviate at all from from the open positions. The only thing that might change is, like I said, when we're first getting into the market and we don't have any profits, we may be tighter on the stops. And that's just, again, as I pointed out, open positions, we're given the maximum stop. We may, cut maybe half, quicker, or use a little bit tighter stop, but the buys are going to be pretty much exactly the same. I think the way we go in with progressive exposure and the position sizing, I think that's what we don't provide on the open positions. That's just, we just put them all out there, and it's not an actual portfolio structure. This is actually going to be in a portfolio structure, so you'll see, how the position sizing is done. So, but yeah, to answer your question, very soon. I'd say no later than 2 weeks from now, but probably next week.
I think that was about it. There was one other, there was more of a question, a comment saying, are we going to use progressive exposure based upon what we're seeing within the Minervini Select trades, not just the other trades on MPA? And of course, the answer is yes. But if you want to add some color there as well, Mark.
Well, I mean, it is one of the same. So, that's what we're calling from. We're using all that information, our own focus list and open positions, all that is, available to us for feedback. So it will be one of the same. But the thing with the select is that we only have so many slots, right? So with, open positions, we're just going to put whatever breaks out. And sometimes there'll be 10 stocks, 20 stocks, 30. I think we've had at one time over 50 names that were open in really good markets, that we had easy dollar environments that went on for months and months and months. So with the select, we're only having, a certain amount of capital. Once it's put into a stock, that's it, right? We have to either use forced displacement or take a profit and move the money somewhere else. It gets stopped out. So yeah, it's going to be one of the same. So we'll be using everything that's available. But like I said, don't expect any deviation. There's going to be no deviation whatsoever in strategy or style. It'll be identical, just more portfolio oriented.
Yeah, I think that covers it for the select questions.
Yeah, I think so. Let's see. Commentary. How did you end up picking IBIT as a stock? Okay, yeah. And again, so there's a question on how do we end up picking IBIT as a stock to buy today. Um, uh, and again, that I think I'll answer this because it does go to the heart of the select portfolio because it's the only trade we have. And so, and Mark, you can answer this too, but we collectively are discussing, these trades. And certainly, if Mark and Brandon want to make a trade without me, that's fine. They can. And they've got the button. I don't have the button. Like I can't actually place a trade. They're placing the trades. So I can tell them, hey, I want to buy this here, buy it. And they'll buy it, or they can buy on their own. But we're generally just having a discussion and saying, okay, this is setting up. I mean, I tend to, and I think I can speak for Mark and Brandon too, that we tend to go in the areas that are moving up. Like a stock's down big. If we have the whole list and we've got 5 potential names that we may buy. Like right now, I mean, I'm looking at a couple names here that IBIT has been one, of course. Coin, we already took some, but it's also, Spot is trying to set up here. It's staying pretty tight. You see, hold on, let me just take this out there. Drifting back a little bit. You got that, what I remember I call that putting in a little hook there. Yeah, you're just getting that little last tightening. I love this action here where it's up at the high of the day. So let's just say we've got, a handful of names. We're going to be buying the ones that are moving, and if this morning you had coin was moving and then IBIT started moving. We're buying the ones that look the best coming out of bases. And I know Mark has an affection for Bitcoin, and I do too, because I think there's a lot of upside there. I think there's a great amount of upside. And when you're coming into a stock or a trade that you have big upside, and you've got this real nice tight pivot that's setting up with a clear out of 2%, 1, 2, 3%. We're all over that. We want to, and especially if it's if things are working and we had a profit, I'd probably be saying, let's put half the account or all the account in this thing, and put the whole account in the whole intraday. And if it moves and we get up, all right, cut a little out, finance some of the risk, and we'll go overnight with a bigger position if we can finance some of the risk. So you'll see how that unfolds over time. And it's going to take a little time before we get into a market environment that we're able to, really start getting aggressive. But I'll tell you right now, when we get aggressive, we get aggressive, and you'll see exactly what it looks like. So I don't know, what would your answer be? Why are we in IBIT?
Yeah, it's I mean it's the tightest, and if this was a more of a stock, it's a 99 type RS name. And yeah, obviously, and fundamentals aside, I've just been waiting for another tight entry. And if you look at today's entry, it looks very similar to the other two entries we got in earlier in the year. Look how similar that looks.
Yeah, yeah.
Volumes coming down, as the price is sort of contracting on the right hand side. And what Mark drew in there, if that happens, anything close to that red, we're going to be going overweight,
Yeah,
100%.
100%. So, and if you take a look too, so we originally started buying it back here on February 7th. And if you remember, sold some here, de-risked, came back in here and bumped it back up. And then it had that big down day, which kind of came out of nowhere. We got sort of a lucky snapback, it felt like. And I said, okay, let's get out of here with this volatility. Sold it here. It went up for a few days. And then since then, we're pretty much right where we were, where we took that off. So we bypassed this 2, 3 months of digestion. So this is just very typical of how we would trade, where we would come out of a base, trade out into the strength, look for it to rebase, and then re-enter. And like I did this with Yahoo back in 1997, like 8 times. Now, the first time it went up 100 and some odd percent in 3 months, and I made a double. And then the next time it went up like 60, and the next time it went up like 30, and then another time it went up like 40. And when you compounded it all out, I made Yahoo went up 8,000% when the first time I bought it, but I didn't get 8,000%, but I got a really big move. It was several 100% based on, compounding it. So this is just classic, very, very classic how we would trade. Coin also, you take a look at coin here, you've gotten these bases that have set up, but each time, and I know some might have said, well, why are you buying this out of up the right side? This has a character of sort of going up the right side. Look here, without setting a pivot. Here, compressed, a little wedging pivot. Right here, none at all, really. And then this little pullback. Like that's the character of the stock has been every time it moves higher, it comes out of a base and it doesn't give you that pivot. So this time I felt like this is one of the best pivots that we saw in it. And since this thing's been moving out of the last 2 or 3 bases. But yeah, so that's basically that. I'm gonna let you guys go to talk with Mark and Brandon. And I'm gonna go back to doing my work. And I think yeah, I think we got a lot of questions here for stocks for you guys, so you can go back to the beginning and start with that.
All right, sounds good.
Okay.
Yep. Thanks,
Talk to you
Mark.
guys later. Yep. Bye bye.
All right, guys, we're gonna switch microphones here, so give us one moment here.
All right, you guys hearing me okay? All right, nice.
That's nice. That's nice. Should be good.
All right, guys, can you give us a quick raise of the hands again?
Should be no
Yeah,
no echoes here, I hope.
Okay.
Sorry, we're rather than using multiple headsets, we're going to a room mic now. Okay. So I see there are a lot of questions about Bitcoin, IBIT stuff. I just wanted to cover one or two more here because there was a few that maybe they didn't cut one or catch. One was, does it look like it has a higher probability of gapping overnight? We have no idea. That question from Wei. Like I said, listen, is there a little more potential added volatility with Bitcoin? Well, sure, but that's why we're waiting for a tight area to get on board. And someone else had asked, are we basing the buy decisions based on the BTC price action or just making it based upon IBIT? Look, you can look at both. We do look at both. I think I posted, I mean, I can show you this, if it helps. I posted this. Oops, that's the wrong thing. Back on, if you look at Bitcoin here on the trading view chart. I mean, yeah, you get the weekend, but you had a little low cheat right here. And we added a little bit to our position there. And now you can see here, we're setting the right-hand side, but that, looks exactly the same pretty much as this. This is a little gappier because that's a 24-hour plus weekends. But for those of you who want to trade the spot, as I've said many, many times, the same techniques, guys. So we're using the exact same techniques. To top of the questions, we'll go for, I don't know, we'll try and go maybe definitely 12:15 Central Time to get through as many of these as possible. Timothy, I see your question basically talking about being on a really bad losing streak. I don't really see a specific question other than a comment saying you stopped out something like 15 times in a row since February. Well, we've had some losing streaks like that. Like I've said before, the key is, are you staying really small? And I think we had a period 17 to 20 in a row. If you're going to have even a 40% win rate in a really tough period, again, not looking at all the trades. I'm not going to comment on anyone specifically, but losing again, wins and losses do come in bunches. So if you want to ask a more specific question, and we can try and address that.
Well, yeah, and it's hard to really know, like, with all the times you say you got stopped out, where were your stops? I mean, there's a lot of more information we need, in that to kind of help you out, if you will, on what you're stating there. So if you want to try and type that in below, maybe we could look at a few of those stops.
Let's see. Hytham, we covered your first question in the Mini Select, but you talked about buying Oscar on 5-3 at 1820 right here. As it moved above the close of the previous day, held it through earnings, sold it on 520 at 2220. So you sold it right up here. Oops, drew that wrong. Right there. Oh, no, 520, I'm sorry, right here. Not there. Could you please help me grade the entry and exit from my trade grader? Well, look, I would say if you bought this here on 5-3, I'd say you bought it pretty close to perfect. You could have started it maybe a day early, but it looks like you were trading near this. Yeah, I think this is a good buy. I mean, the earliest you could have bought this might have been through this little pullback by here. Yeah, I would grade this as bought perfectly. And the sell, this is, if your plan was, my question with the sell might have been, were you waiting for the first natural reaction and then into new high ground? So I'd have to look, and this is where you sort of ask yourself, what you sold it. If you just sold into the first move and you're a short-term trader, then I'd say you sold perfectly. If your goal was to hold through the first natural reaction, you might have sold a little bit early, or then, you use up some type of a trailing stop. So that's where you kind of have to ask yourself, look, what was my goal? You're at a multiple of your risk here, though. So I would definitely not grade this a bad sell. Michael's saying he held a part of STG into earnings. What's the best strategy for selling after positive earnings reaction? Sell right into the open, wait until the end of the day. Should we look for a specific signal? Well, Michael, if I knew that with a 100% probability, look, on a name that's this extended, this is where I would be using this strength at least for lightening up, or maybe even if I know I want out of the trade. Because look, you're sort of shifting from this trend to going kind of vertical here. And if you're at a multiple of this initial risk from down here, I'm looking to use this at least to nail down some, or then set a backstop. So let's say, where did this open, Brandon?
Right near the eyes. So
okay, so you open
68.50.
Jeepers, yeah, we did open like right on the high. So you opened up here, and let's say, okay, now we're at a 8R trade or something like that, and you don't want to give it back. That's where you can just set the backstop intraday, or decide,
You know, how much am I willing to give back? And then if the momentum keeps going, you just sort of cinch that backstop up, let the momentum take you out. That's actually a technique that I think is highly underrated that Mark taught us and that we use because, you know, okay, maybe you had already de-risked the trade most likely. So at this point, it's all profit from here, and you've de-risked it to the point you're willing to not allow some to give back. So you have to ask yourself, you know, hey, when am I satisfied with it? Now you don't have to just go ahead and sell. That's where sometimes we like the backstop, especially in a situation where the momentum's sort of running away from you, because we don't know where it's. I mean, the stock could have gone to 70 before reversing. So yeah, I would use some form of backstop though, and just protect yourself that way. Nothing, you know, draw a line in the sand, if you will. Eric's saying yesterday bought 15% position of WDC, 77.20. Okay, stock dropped 3.5% this morning. I sold half. Was this advisable sale, or should I have given the stock more time? Well, it certainly wasn't doing anything wrong. So the question is, why were you selling? If your goal was to, I don't know, use yesterday's low or something as a stop, you're just being too tight. Even this add-on point here, you know, ask yourself, what's normal? Well, even something like this, you know, is potentially normal, you know, where we undercut. Now, see the difference here? Like this is a situation where I wouldn't be really, really tight right here. Where in a situation like even Mark was talking about here, where we're expecting this to get going right off the hop. Mark was even saying I might even use the intraday low if I was really being aggressive, or right here, because that right side isn't, you know, if this sort of fails, it's not that it can't reset, but we'll just step aside. Where this being really tight right here makes a lot more sense to me than right here. See the difference? So I would just, you know, say it's possible maybe you took too big of a position, got a little bit spooked on the open. We are seeing a few of these tech names, you know, pull back a little bit today. Nvidia's had some profit taking, crowds pulling back. So yeah, this might be, you know, part of that. And, you know, with the Salesforce miss on earnings, a few things like that. But so far it's acting fine and it's trying to come back here. Let's see. Ian saying, do you compound or trade a fixed position size? Think and Trade seems to go that not compounding is the way to go. No, I don't think that's what Think or Trade says. And yeah, we definitely want to compound.
Yeah, and I think typically what we've practiced is once we get a 10%, you know, booked gain in the account, then we'll start bumping up our position sizing. So I don't know if that's what you're referring to, but you know, yeah, typically we have a fixed size that we start with, but then as we make money, we want to bump that up.
Jerry's saying, can you take us through an example of a recent de-risking of a trade? Sure. Nvidia would be a good one. Although this was actually not fully de-risked before, you know, the earnings. But, you know, selling into this gap here, you know, if our initial stop was right here, you know, so once we sell here, we're at a 3-4 hour trade. It's worst case scenario now, and move your stop to even break even. That's a perfect example of de-risking the trade. There's no more risk as far as we're concerned because we've booked enough profits to ensure that the net is going to be a profit or a break even at worst, meaning i.e. the risk is gone, it's de-risked. Constantine's saying, can you please review my trade? Not seeing the ticker, Constantine. See the ticker on that one, Brandon?
No, I don't.
Saying you give us where you bought on Friday and then Monday, but I don't see the actual ticker, so maybe throw that in on the bottom. Gary's in the meantime. Gary's asking about ATMU, saying it's not ready yet. But my question is about the big down day on 5.3. Is that a flaw or a good thing? Is a bit of washout since it happened on the left-hand side of the base 5.3. I think you're talking about this. I would have liked this. This would be much better if it had a good close, showing that it sort of cleaned things out, and then that there was some buying appetite. Here you got a bad close. Now it has come back, but yeah, I would just tend to agree with your first. I do like that the volume's drying up. I would tend to agree though. I don't think it's really ready. Mark's asking, can you go over IBIT? We did, but evaluate my URA buy. Bought on 528, his price went above the high, made on 524. It's right here. Listen, if you missed this breakout, could you have used this? Yeah, I think so. You're sort of establishing, sort of a similar entry point, expecting that, this is going to sort of make higher lows or get going. It would be or, maybe a little bit more aggressive of an ad. I would have liked to see this pullback sit on top of this and not pull in quite this much. But look, if this can stay tight, or maybe we can get some type of a cat pattern that even forms here, over the next week or two, we could still have subsequent ad points. So I don't think that's a terrible. I actually like, even today, because you had a decent close yesterday. If you wanted to get in the name, you're sort of establishing that same area. And this is what we need to see, is the train's coming in on schedule. We want to see this get back in a new high ground in relatively short order. John's asking about HEAR. It's a turtle. I remember this one from a while ago. Started a quarter position yesterday above 1670. Yeah, I saw this one. This pullback was a little bit excessive, but this little, you got a little mini, you got to cheat here. And this is a good, if I was going to buy this, I would have done exactly what you did. And I think it's a decent buy point. This is one where you're running into a little bit of supply and the size of this correction. The other thing I like though is, look, there wasn't a lot of heavy volume here. You do have some nice volume here and some good supportive volume here. So look, I think it's a decent use of the tactics. And if it doesn't just go, or you stay tight on it and you step right aside, 96 relative strength. So yeah, all in all, I like it. And I like how you're using the tactics. Do you think it was aggressive? Yeah, a little bit, but as I said, HCC is your other question. Started a quarter position May 28th. I'm guessing that was this day. Above 67, the squat that day. Can you comment on the entry? Well, it's tight. So again, I think you have a good eye, John, for the two pivots you just shown are if you're going to give me those charts in a vacuum, those would be the pivots I'd be wanting to trade. This one I don't like as much because it's in the coal area, sort of cyclical, but look, you've got a little pivot here, and I would just stay, this is pretty tight. So it hasn't stopped you out yet. I like the here a little bit better because it's higher RS. And I like that area, sort of that, technology, gaming, those are a little bit more momentum type driven names. Nancy's saying my definition of symmetry is different than yours. Could you please explain? Well, I don't know it's hard to do, Nancy, without knowing what yours is. But going back to even a chart like this has pretty good symmetry here. See how this has gone through this type of corrective period. And now you've got this tight little area where the stock has had time after marking itself up to then come back down, shake out some, sort of wringing of the towel. Those of you who've been to the, Master Trader program, it's had time, to wring out some of that supply, IBIT being another example. So not knowing what yours is, I can't really comment, but we want to see that pattern, that VCP characteristic. Remember, the VCP is not a pattern, it's a characteristic where prices are tightening from left to right as strong hands are taking out weak hands, and that line of least resistance is moving up.
Yeah, and I think for me, that symmetry look is something that you get from studying past precedents. And as you look at more and more charts, you can see like how a volatility contraction should look. And that's, in my mind, that's the symmetry we're talking about.
Yeah, and George is asking about Hood. And here's an example of a name with not enough symmetry on the right side, in my opinion, but it's a 98 relative strength name. He's saying he bought today, coming through here. Look, in a better market, I probably would have been buying this myself. This is actually a name I wanted to own. And I looked at it here even. You caught a nice close here. You could have potentially even started the position there. And yeah, this is that lack of symmetry may pull this back in. But look, it's not a bad entry. I almost sent this to Mark as a possible idea today, because sort of power play-esque. You had this, wasn't quite a double, pulled back. We actually tried to get on board the name, I want to say down here, got stopped out on this move to these lows.
But I'll say too, like if you see like where Marky pointed out in that little cheat where it shook that, it tried to go there, it shook out on earnings, but then snapped right back. Yeah, right there.
right up
and
here.
then, it was trying to form a right side, but it was a little just a tad bit early for us. But yeah, I think it looks okay.
Yeah, this is
It's
sort of
good.
that-
It's strong. Look at
that-
that RS line too.
Yeah, that sort of Hardaway crossover, almost slingshot move where even if you tried it here, you got shaken out and wham, came right back. It's a strong name. So, but yeah, this right side, and given, look, if we had a lot of really short right side high RS names that were working, we might be playing them.
Yeah.
But given that we're still, feedback's a little bit mixed, it's a more aggressive play. Let's see. Michael's saying URA had volume on 517, which is a witching Sabbath. Is there any way to separate the regular trading volume from the volume generating by that? Well, you just have to account for it, knowing that, yeah, sometimes on the actually 517 wouldn't have been a witching Sabbath, or at least a
Quad witching.
a quad one anyway. So, look, with rebalancing days, sometimes options expiration, third Friday of every month, but specifically the quarterly, those ones tend to be the big ones, where this one I would not have, and I think this was a general group move where a lot of uranium
driven too, maybe.
Yeah, I think that's right. So, based on the whole U.S. passing the Russian ban, I think there's been some news and fundamental bullish headlines in the uranium space. So, either way, though, this is coming out of a good pivot. So, and when normally we look for, like, for lack of a better word, suspicious volume where the stock didn't even move and had a huge volume spike. That's usually when you see in the rebalancing days or those sort of quad witching ones. Steven's asking about, or Stefan, not sure, the pronunciation on FSS. Was it a buy? Would you still consider buy 8741 with the last 2 days? What I don't like here is you get the volatility starting to widen. Now, this is still, because I was looking at this is still relatively tight. So could you buy this? I don't love that it sort of, shook out first and didn't stay inside and go. So if I was going to play this, probably play a little bit smaller, or then see, do we subsequently, maybe put in another tight day or two, or a pause pivot. Pedro's saying for IHG, the Monday 520. Yeah, we talked about how this was, because we said this is, you're trading near the danger point here. And yes, you're running into some supply, because you're saying, was that a concern? It was, but we said it was really tight, and we're expecting this to sort of come up in the right hand side. It didn't get going, but we liked it because it was really tight. And look, this could still reset right now, though. It's just going the wrong way.
That was Mark, closing Mark. It's rolling back here.
Yeah, this is just a good example of, when the train doesn't come in on schedule and you sort of get this snapback, you can decide to step aside and wait and see if it resets. Kelly's saying, can we share the number of shares or dollar? Yep, we're planning to do that. So we covered that before. Platform featured Laos, who's doing well in the USIC. One of his tactics is to use tighter stops for stocks with more shares outstanding. Can you comment if this is a tactic you use? I don't recall this being mentioned in the platform. Well, if we're talking about tight stops in terms of liquidity, that's what, when we're talking about more shares outstanding, we basically mean there's more liquidity. So we talk about that all the time. If you're going to be really tight in something, and especially if you're trading size, you have to have liquidity. Otherwise, by definition, you won't be able to be tight.
Yeah.
And look at something even like an IBIT. Things trades, it's a penny wide, thousands of shares on each side versus, you know, a small or mid cap name, which might not even have 100 shares, a dime wide. So no, that absolutely, especially if you're going to be really short-term trading, like some of the folks in the USIC that are being really aggressive, you have to have that both liquidity and tight spread. Mark Minervini mentioned David Ryan normally buys partial position when the stock goes past the pivot and add them where the stock stays strong on the close. Is this something that you do as well? Not as much. And I think what he's referring to, and Dave is, more of a swing position type trader where he wants to see, is this stock, is there more than just him buying the name? Is there volume sort of coming in throughout the day or coming into the close? But if, memory serves me correct, Brandon, David still wasn't going to overpay.
Right.
So I want to be clear. He's not paying up too much. He's still being very disciplined with how he did that.
Well, and I think too, like, context is everything. Like you can add on a high like that, but with the idea of not wanting to drive up your average cost. So maybe you buy another 10% of what you have already or something like that to keep it small, to add a few extra shares, but not driving up, where your average price is. Because you don't want to pay up too much for something.
James is saying he's off to a great start to the year, is up 65%, mainly just been trading around a few core positions. Be interested to hear how many trades you guys have made. I've only closed 22 trades according to the tracker. I have a 60% batting average with almost 9-to-1 win to loss ratio. That's phenomenal, James.
Really
great job. Should I be getting more aggressive in the progress or just stick to what's been working? I will, first of all, always do more of what's working, meaning stick to your knitting in terms of I'm not going to sit here and go, you need to drastically deviate. You're off to a great start. And look, it sounds to me like, James, you've been in some of the right names, being a bit more selective. Well, that's fantastic. And if I remember, I think, James, you had mentioned you had a big position in NVIDIA. Well, great. That's how you're going to, even doing less trades and being more of a stickler, but trading around some of those key names, you can rack up a really good gain without having to do a lot of trades. This sort of, there's a number of ways to get to your goal, right? And James, you're taking more the position trader approach. I think that's great. So, and if that fits with your personality, stick with it.
Clearly it's working.
It's working. That's right.
As far as closed trades for us, I just looked, we have 32. So, and we have 5 open trades. So.
Fahimi saying, Mark, I understand you're not a fan of the commodity names, but you like uranium and uranium stocks. So do you not discount uranium and its stocks, even though linked to a commodity? Well, and remember again what I said about this. It doesn't matter. And this is where the idea of liking something, I want to be really careful here. Yeah, I mean, look, I have fundamental opinions all the time on things, but they're tied to a low risk entry point. So it doesn't matter how much I like it or want to own something. I've got to wait because I'm not going to get aggressive without a tight exit. Well, I can't do that without the technicals. So in the case of uranium, look, I think uranium, I think we should be, powering our entire country on uranium if we're up to me. It's not up to me, in case you were wondering. I think it's a phenomenal technology that is, none of those opinions matter, is my point. Now you're making it sort of a statement where I've said my track record in some of the cyclical commodities is not very good. And I'll give you an example though, and we talked about this, oil being one of the areas. That's FSS, which we can put on breakout alert. I'm going to put that in breakout alert right now. The oil names, was it FTI? Here's a good example. Often what happens is you get this really nice, this is a nice little setup here. Yeah, you came through a little cheat area here. Stock pokes its head out, comes right back into the range. I've found that just our general record in the commodity areas, oils, even things like some of the potashes and fertilizers and grain related stuff, chemicals, banks, I mean, were even worse. I know those are cyclicals as well. I think if it were up to me, I'd probably never trade a bank or financial again, just because just haven't made any money there. I've found that, these breakouts to new highs when the RS levels are a little bit higher or they're more obvious just don't work as well as some of the higher RS from the classic growth groups that Mark talks about in his books. But that's borne out in the data of our own trading. Now, uranium being a good example, yeah, I have a strong fundamental view. I'll use the URNM because we've traded around this. We put on a big position here. If you were to add, I thought, we only de-risked some of this and wound up getting stopped, sort of a break even over here on the rest. Well, again, my fundamental view, I'm heeding to the technicals. And anybody, I knew some people who bought this breakout or, we tried it here. It's just been a tougher, ride to stay on. And you've been better off trying to play the low cheats than when they're a bit more obvious. May that same thing happen here? Yeah, it might. But a setup, if it's a good setup, I'm still going to, dip my toe in the water. So at the risk of sounding like I'm talking on both sides of my mouth. And I would say we've also traded around the uranium stuff. We have a little bit more success maybe in that area than we have in some of the other commodity areas, but still nowhere as near as good as technology, biomedical, leisure entertainment, those classic areas. I mean, and again, that's borne out, based on studying our own results. And our biggest position right now is IBIT. So we're talking our book there too, that it's not in uranium. When grading setups, Robbie's saying especially short bases that are not power plays, how would you go about it? I'm not sure if categorizing them as faulty setup is correct. The setup appeared tight. For instance, APO on March 25th. Well, let's take a look. I'm not 100% sure I understand the question, but this is a pullback by right here to the top of this base. Did we say this was a faulty setup? I'm not 100% sure, Robbie, what you're getting at. This is just a short look. This is a short little base. Was it viable? Yeah. And how many times some of you guys have heard me say, I don't like the short ones or shorter bases like this that aren't the power plays or the really high RS situations. And that was what this was. You're also asking about Uber, where Uber was an example, September 8th. I don't know, 2023. All the way over here. Yeah, Uber was September 8th. This wasn't the buy point we were looking at, if I'm not mistaken, or maybe we were trying to get on board here and then it shook out and came back. So again, Robbie, I'm not 100% clear on what you're asking. Your second question is, though, I would say about half the trades are easy for me to figure out the errors, but the other half are kind of challenging. For instance, I was not sure where I could say this was premature. We're talking, I think you're referring to specific, maybe trades that MPA is pointing out or highlighting.
I think he's talking about how he's been grading them.
Oh, I got you.
In the grader.
I got you. Okay.
So what I'd say, on the ones that you're having a challenge with, maybe just put a grade in there for now and put them in a special book that you can go back and look at over time. Where maybe you'll change your opinion on it. Because again, like this is more or less, don't hold too much weight in just one grading or even 5 grades. It's more or less trying to get a picture of what are you consistently doing wrong or consistently doing right.
Gino's saying you got stopped out of crowd this morning. Curious if you still have a position, and if so, how would you play going forward? We do for now. I'm wanting to see how we close, but obviously when we making that determination, we know where our stop is, whether or not we want to peel some off, maybe even a break even. This isn't that surprising given, look, you had this and now you're having this. We may just need to develop more of a right-hand side. Doesn't mean we're going to sit around and wait for that, though.
Right.
So the question is whether or not we're going to be able to sit through, a potential, look, everything was looking great until today. We also got the earnings coming in next week. So most likely, unless we can get some type of a cushion, we'll be maybe stepping aside or de-risking. This is a name though, even if we get knocked out of it, I'm gonna look to see if we can get back on board it, just because this is sort of we talked about this last week. This is really your first base, after forming this new uptrend. So if possible, yeah, we want to own the name. Thoughts on PETQ from Donald. Yeah, this just doesn't have the look for me. Taking a look at this on another screen, I kind of see what you're saying. Big base, 84 relative strength, especially sort of in the drug area. I think there are better names to be looking at. And just this is really short here on the right hand side. MBA saying, can we share why Taiwan Semi isn't making focus? No, there's no pivot. Look, it's been strong. And if we can get some type of a pivot to set up here, it's just too short. And you're still running into this reversal here. This just needs to set more right hand side. Fahimi's asking about APP. Yeah, this was one that was really short right here. I can't remember. Did we put this on? This might have been on focus list. It might not have been. And really just came right out. Obviously, it ran into the earnings. Now, or you're saying, can we put in some type of post earnings pivot? Look, high relative strength, triple digit earnings. This is one you should have on the radar. This is actually, it looks really good fundamentally. Obviously, you get the breakout year over here as well, and it's in a good group. But it's just a little short. Braxton saying, do you guys calculate two different numbers for risk of total equity as well as your drawdown if all stops are hit? If so, are there general levels for both numbers that you're comfortable with?
I don't know if I know what he's asking there, but I mean, typically we're just really tracking, yeah, if we get hit on everything, what's the total, hit to our portfolio? And that's the number that we have to be comfortable with.
And we ask ourselves, are we comfortable with this based on where we are, based on how things are going, how much, if we're in a tougher period, that number gets smaller, meaning we're going to be less forgiving. If we've had, a good run, we may be willing to be a little bit more forgiving, but yeah, that's the determination you have to make. Hazim's asking about IBTA. Yeah, we talked about this and saying, is it buyable tomorrow or does it need more tightening? Yeah, I would say it needs more tightening. Just measuring here real quick. I mean, look, it just doesn't have a very good look. It looks a little sloppy on the right-hand side, even in terms of percentage, though. This is reasonably tight. So if you could get it to calm down a little bit, I do like the earnings here, obviously. Abdul Rahman is saying, can you critique the entry for coin? Added a position at 247.50. The buy for coin, if you're going to buy this, I would have been buying it, right through here. So the question is, that buy looks late to me. It looks like you just decided I can't handle this going up any higher. I'll buy through this high. Why weren't you buying right here? And even this was, like Mark mentioned earlier, a little bit of an aggressive buy, but given the, sort of the price nature of the stock in the past, this might be our only shot. So yeah, I think now, 247 all the way down, especially down to here, you're more than double digits. So where are you going to put your stop where normal price action isn't going to knock you out and still stay tight? Eddie's asking if GE is setting up. It's too short, at least right now. Sahil saying about NYT. Good old New York Times. At 50.25 with a stop at 49. So obviously you're playing this really short little pivot here. Yeah, I don't like this for a variety of reasons. The first is there's just this is not a high RS situation. You're running right into these old highs where a bigger pullback would be normal. It's a laggard in terms of relative strength. So yeah, in even if you're going to play something this short, I want to see it in a 98 or 99 relative strength, and this tight, because you're just on a name like the New York Times, you're gonna get stopped out. This is not a winning proposition. Playing this hand 1,000 times, you're going to lose money, in my opinion. And if you do make money, it's going to be an absolute grinder.
Yeah.
Tobias is thinking about Lily. Today above yesterday's highs. What do you think? Yeah, we debated it even yesterday. You sort of had this, was this a viable sort of reversal pullback, type buy, even yesterday. Yeah, I think you could have possibly started a position there. Look, this is stayed strong. We had some of the other drug names sort of come under pressure. It's tight enough. Is it acceptable? Yeah, I think it is. I'd like to see it, maybe even go through another little iteration here. Maybe you drift back a little bit. And come out. But if you want to get on board the name, yeah, I think yesterday was the spot to start the position. Karim saying he basically finds the great, likes the greater, find it amazing, found two problems for me. I buy too far from the pivot. 40% I'm chasing or extended. Okay, well, there's really valuable information. How far is too far for you from the right pivot? I sell to, okay, let's start with that one. Well, as a general rule, we're saying 1 to 2%, no more than 1 to 2%. So the question is, if 40%, and this is really where 40% of your trades are beyond or are chasing or extended from the pivot. A lot of people might think, oh, I'm still good on 60%. But those 40%, so let's say you're buying beyond 2% above the pivot, 4 out of 10 times, that could be your entire edge right there eliminated.
Mm-hmm.
Over the course of, do the math, over the course of 100 or 1,000 trades, that is an enormous amount. Remember, it's an incremental thing. So incrementally, tightening that up will make a big difference in your performance. Selling too early, often under panic when the market sells off like yesterday, is the other. Yeah, I think armed with those two things alone, and this is the value of the trade grader, guys. And by the way, everybody, Mark has quoted Ed Zakota's old interview a number of times. There's a really great line in there. He talks about where Jack Schwager asks him, can losing traders turn themselves into winning traders, or can losers turn themselves into winners? And Zakota says, no, that's only something winners do.
Mm-hmm.
Meaning winners put in the work and make the changes necessary to transform themselves into winners. That's how they got to be winners. And Karim, I'm just saying, using the grader, you're well on your way. This is exactly how you're going to see those things in real time and let the stats and data start working its way into your actual decision making. Selling too early, well, this is simply an issue of, if the stock isn't doing anything wrong, why am I selling?
Yeah, and sticking to your plan of why you're getting into that stock in the first place. So when you enter a stock, you should have a stop, right? And if that stop is not triggered, why are you selling it? Now, if something changes in the market and that's part of your plan, then that's a different story. But if you're just panicking because the market's selling off, then you're not sticking to the plan.
Let's see. Devin saying the button to bring up the select portfolio doesn't show up on the iPad. Well, it's a newer button, Devin, so I'll ping that to Bob. Again, that's going to go through some changes in terms of the Minervini select is, we're just getting that sort of out of beta, if you will. Khalid's asking about UHS. I mean, presumably, look, I mean, this was relatively tight. Again, a little lower RS, a little bit V-shaped here, but I like how it drifted back. Could you have tried this maybe today? Yeah, I think so. And then OWL, we already talked about OWL or FSS. It's a little bit sloppy. You have this decent sized reversal here. You're sort of contending with both of these. I'd like to see this come back up to this level. You're trying to tighten up here or drift. If this can stay tight, look, could you try it? Yeah, it's also this is that finance group that's continuing to hold up well. see here. Okay, we'll go for another 10 minutes. Kareem saying, I struggle a bit with drawdowns on my equity, tend to stress and sell stocks too quickly because of that. Not an easy one. How much is too much for an equity drawdown for you? Do you only look at single stock positions and don't make decisions on the whole equity? Well, we just talked about that. No, we're looking at both. And look, here's a good example. Like, let's say, in a name like Crowd, where we have a lot of names doing this. We may want to hold, or our original stop is down here. We may just start cutting some positions if we say, look, we're not going to take everything to stops. If the absolute worst case scenario is too much, that's where you have to know what the worst case scenario is, and then ask yourself, am I okay if that happens? Meaning, is that going to be too big of a give back, too much of a loss?
Well, and I think too, like, if we're talking about drawdown, so say we're in a drawdown, right? That equity, total portfolio equity risk that we're willing to take is going to be a lot smaller than when we're coming off an equity high. And we're willing to accept a little bit of a drawdown because we want to try and, give the market the benefit of the doubt. Now, but if we're in a drawdown already and we're trying to prevent it from getting larger, then of course we're going to be keeping that risk a lot tighter.
Matthew's saying, I think this is about the intervening select. Can you integrate trades into the analytics so we can see how you would use the analytics to plan future trades? We don't use the analytics to plan future trades. Just want to be clear about that. I think that's probably what we use the videos for. I think it was more just sort of be like a real-time post-trade analysis in terms of video comments and things like that. Jerry's saying, what's the take on Micron's action today? Normal.
It's acting normal.
I think it's acting fine. Look, we're talking about 2 days of pullback here, coming off of new all-time highs. The name still looks pretty strong. And look, tech's been strong. That's one of the areas that's been working. I would expect, this just looks like a natural reaction for now. But again, we don't know that in real time. Let's see here. Thank you for doing a great job. Okay, yes. Thanks for that, Hazem. Did we ever get a symbol from Constantine? Sorry, go on.
Yeah, I'll go real quick.
Make sure we didn't miss that one. In the meantime, Simon's saying, for the regular question session, is there a cure for the chronic choking position syndrome out of fear? Well, if you have a problem or where you're jumpy, sounds like you're jumpy. The only, well, I shouldn't say the only, but the recommendation I would make is you buy a stock. Think of it this way. You have a plan written down, and that you should be more worried about not following the plan than what the market's doing. Meaning, I'm worried the market's going to crash tomorrow. Well, if it does, guess what? You'll just get stopped out and step aside, rather than having all these other opinions about, why I should have gotten in out early or should have sold here. So I would say, until you're able to actually follow through and follow the plan perfectly, you shouldn't be overriding anything, because you don't have the experience, to be able to do that. And this is where if you can't stick to your plan, you're never going to be able to be successful in anything you do, because you won't be able to hang in there. The reason most people don't make it in this business is because lack of discipline first and lack of staying power second. Meaning they might be disciplined for a week or a month, but then they can't consistently apply the discipline over months and years, and then of course that leads to style drift and a whole bunch of other things. Well, this doesn't work anymore because I took 10 losses in a row.
Yeah. Did you talk about emotion? I was looking at Constantine's, looking for that ticker.
I did.
But so, the whole point of being disciplined and having a plan is to take the emotion out of your trading. Like, I get it. At first,
losing sucks, guys. Let's be honest.
Absolutely. 100%. And when you're new to this, you don't understand, or you don't realize how much your emotions screw you over, where it's your emotions are making you do dumb things, versus the plan and the discipline is forcing you to ignore those emotions. So that is how you combat that. You just have to have trust in the plan and in the discipline that over time you're going to be money ahead if you stick with it. Forget the emotions. Oh, it's easier said than done.
Well, but to be encouraging though, like with time and practice, you can absolutely change the way you think, which will change the way you behave. And what I'm trying to say is rather than often this obsession with choking trades and that type of thing, to Brandon's point is you're giving in to different temptations for whatever reason, rather than saying it should bother you more to not follow the plan than to override the plan. The plan was I'm buying at X price and stopping out at Y price and taking profits at Z price. Do that 10 times in a row, 20 times, so many times in a row, that you're reinforcing the right habit of following plan, sticking to the discipline, following the plan.
Yeah, I see. I just saw Alicia ask a question about what we were talking about earlier that I want to clear up. She says, Brandon just mentioned that you bump up position sizes until you have 10% profit booked. Do you take 12.5 positions, 12.5% positions until that point, or please provide guidance? And no, and Alicia, what we were talking about is you don't bump up, say on a $100,000 account, a 25% position is $25,000. We won't compound that, meaning we won't bump up our position percent size to that until we get a 10% gain booked on the portfolio. So instead of a 25% position on 100,000, now it'd be a 25% position on 110,000. So I hope that clarifies what you're asking there.
All right, scrolling here for few other questions. The crowd already talked about that. Talked about Lily. Can you grade buying ANF on Monday the 20th yet? Yeah, I would not have been buying here. This is, and I think we talked about this on Monday. This is a name that just sort of wedged right up. We might have talked about this last week. Look, and we've talked about ANF being a monster, right? It's been really, really strong. There was, an entry point over here. I can't remember that we had talked about in the distant past, but this is just a strong extended name that's then has gone parabolic. Look, it worked out for you. And this is the type of situation if you're going to play something really, really short. This is a 99 RS. This is the type of name I would want to do it in. But this was really your only, little cheat area that I would have, if I was going to, say that it was buyable through that. But even that was a little bit short. Dr. Andreas is saying, how can high volume on little price action of RCL on the 14th be interpreted? Is stock rotating here from weekends to strong, or institutions selling on high volume? The 14th, right here. Well, and this is the type of action normally where we'll check to see, was there some type of rebalancing? Was it added? We don't know, of course. And look, is that a potential, sign of maybe churning? Yeah, it could be. Usually when the range is really tight like that, that's when, we often check and kind of see. And then I'd like to see subsequently, does the volume sort of come back down or stay below average? It did. And then, came out orderly. But look, don't get so hung up even on something like this versus what overrides even that is how tight this is. We're talking 2.5%. What I like about these type of setups is I get to know, very cheaply if the train's coming in on schedule. And this would override, even something like that. And look, the day before it went, it poked its head out, paused for one day, volume was light, and then followed through.
Well, I would argue too, yeah, on that day, yeah, it looks like a huge negative volume selling day, but if you, based on the price, it looks like someone was willing to sit there and take it, right? Or multiple institutions were in there willing to buy it. So yeah, I think you really got to pair that with the price. And the fact that price didn't move kind of tells you more than just the volume.
MVA saying, is this a good time to add to Microsoft? No. And listen, let me explain something about pullbacks. Like, you will never see us just going, the stock's down, let's buy it. That's how, I mean, that is not a professional way, in my opinion, to be buying a pullback. So I would want to see, do we get some type of supportive action first? I want to see confirmation that I'm right before I stick my neck out there. Where, and again, if your goal is just to get the low of the pullback, then that's what drives people to use a tactic like this. We don't want the low price. We want the right price where the trend is moving back in our favor. So I want to see a good close. Look, if you get even a good close today, could you then try a pullback by tomorrow? Maybe. I want to see some signs though when the stock is pulling back that's being met with support. TPMG is saying, in the case of NVIDIA being the leader, are we selling the quality stock for only 25% profit? Maybe room to double up by the end of this bull run. Now we have to go lower down the quality ladder. Well, first things first. Let's be clear about one thing. NVIDIA is no secret anymore. Was this a good trade? Sure. Can you play it for a bigger move? Absolutely. We were highlighting it over here. And so listen, the great trades are always going to sell too early. We're taking the quick alpha and moving on to another one. James was talking about before. He probably still, I think he's been trading around a position in this all year. This is where you have to define what kind of trader are you. If you look at the times we put this name on either breakout alert or buy, they've all been subsequent good low risk entry points. Now the stock is extended. So we're peeling it off into this extended run, knowing that it's more likely to, be subject to volatility. But you got to make that determination.
Take one more question.
Yeah, let's do one more question. We already talked about PTSG, so we'll do another one. A lot of questions on crowds. Obviously, some people not in that one. Hi, I'm new to the service from Awesome. Thank you so much for taking the time. My question has to do with NXT. We haven't heard in a bit. The solar theme has been really hot as of late with multiple names in the sector having nice runs. Is it best to stay away from NXT? What type of action would you like to see for this to make the focus list in general? Are the rules loosened slightly to catch a ticker with strong momentum in a hot sector? First of all, the rules, when we say the rules loosened slightly, our version of loosening the rules slightly here is probably more disciplined than most people's even lax, or tight rules elsewhere. So let's taking an example of NXT, there's no pivot here. So yeah, you might be right that solars are running off the bottom, or having this run up the right-hand side. We let those type of things go all the time, looking for tight entries. We were watching this name over here.
Yeah, March 13th is when I'm going to focus list.
Yeah, right here, expecting this, to either stay tight or break
I
out.
bought it March 25th, actually.
Was it put on? Okay. Right here through this little cheat area. That's right. Got right out, I'm guessing either here or here.
Yep. I think that's right.
As it didn't work. Now you're running into this old supply. It's really, even the RS hasn't had a whole lot of this. It's not near strong enough to be a power play. So this is where you just have to be patient. There's no low risk entry point. Look, there's stocks that rip off the lows all the time. Half the time, I don't even see them. A lot of these solar names are that, First Solars. I haven't seen those names on my radar in a long time because my guess is the RSs were low and they're coming out of these, big, long. I'll just take a look at that one for symbol. Yeah, you're right. So here we go, 97 relative strength. Now I'd be looking at this for some type of power play-esque setup. You had a big breakout here. It'll start showing up on our radar, but there's no pivot here. So you just got to wait for the low risk entry point. Remember, there's a lot. If you want to own all the stocks, you can't own them you can't own them all in a low risk fashion. You're gonna have to sacrifice one for the other. And so, the longer you're here, the more you'll realize we're willing to wait and be patient. Even if NXT, it might double from here before we really get interested in it. That happens all the time. That's when it starts to, get on our radar and we potentially entertain it for purchase. So